or let's say a table that we can input when you are doing the transactions. I mean, the
You
interface.
have a particular, please start again.
So she's asking if we have a particular interface, how you do the transactions and the trial balance. Example, the one we did, the one you showed us last week, the way you did your inputs, is that the only way, or you can do it anyway, provided you get you do the trial balance and it balances. Or
Okay,
there's
sir.
this.
Gabriel, let me help you.
Please allow one person to finish. The lady who asked the question, let her ask the question again.
Please, the way Gabriel said it, that's what I meant.
I don't know what Gabriel said. So please repeat yourself.
Sir, please, she talked to me. That is why I wanted to come in.
Please allow her to speak first.
Okay, sir.
Okay,
Elsie.
so like my question is there any approach or any other way we can solve the questions or do the calculation that the inputs, since it will give, I'll be able to get the right answers for the trial balance and everything, but with a different approach?
So you submit it. When you submit it, and I'm marking, I'll look at the approach. If it is appropriate, why not? I'll give you the marks.
Okay, thank you.
All right. So all those who were trying to be your spokesperson, this simple statement, then people want to disturb the class. Oh, what is that? So I'll see. Submit it. When you submit it, I'll look at the approach.
Okay, sir. Thank you.
You're welcome. You're welcome. Any other question? Gabriel, your hand is up.
Yes, please. How do we submit? Is it going to be through LMS or we send it
Yeah,
directly
you submit on the LMS.
once it's opened? Okay.
And then there will be one last assignment, which let me say it here so that you all take note of it. There will be one last assignment that I will give, which you will submit on the day of writing the end of semester exams. Is that clear?
Yes, sir.
How many groups are you? You have procurement and then what?
Supply chain, logistics.
Logistics and supply chain.
Yes.
Or procurement and logistics.
Procurement and supply chain, and then logistics and transport.
Good. So you have procurement and logistics, and then
procurement and supply chain.
Procurement and supply chain, logistics and transport.
Transport.
Do you have management student among you?
No, sir.
Okay. So this is how the assignment will go. The course rep for procurement and supply chain will take the assignment and put it in an envelope, one envelope. Not this assignment, the assignment I'll give at the tail end. You put it in an envelope, and then after the exams, you give it to the the examiner to put it in the envelope for me. Then transport group 2 will collect the assignment and put it in one envelope, and then give it to the invigilator. Tell the invigilator that these two envelopes should be part of my pack. They should put it in the main pack and seal, so that I'll come for it. I don't know whether I'll be there during the exams, but let me give this information in case I forget during our last lecture. Okay?
Yes, sir.
Sir, but
yeah, just Jonas.
Oh, so I'm just acknowledging, sir.
Oh, okay.
Yeah.
Thank
yes,
you.
Sir.
Any other question?
Sir,
yeah, Afu.
Hello, sir.
Yes.
Yes, sir. Sir, please, procurement and then transport, we have one course lab. We don't have separate reps.
Okay. Yeah. That's fine. Then all of you give it to him to be put in one envelope. Afu,
Yes, sir.
Do you get my point? If the
Ye-
course rep is listening, so the
Yes.
course rep will be the one who will collect all the assignment, put it in one envelope, and write my name at the back.
Okay, sir.
Okay.
And give it to the examiner before the end of the paper.
All right, sir.
So that the invigilator can put it in my envelope. Are you okay?
Yes, sir.
Very well. Thank you. Any other question before we proceed on today's class? If not, we jump into today's discussion. Any other question? Okay.
No, sir.
Time is already gone, so let's jump into today's session. Okay. All right. So what did we say is the tribalance? Yes, who can help us? What is the tribalance? Yeah, Festus.
Okay, so you said that the tribalance is the list of all the balances from the individual ledgers. Thank you, sir.
From the individual ledgers, at what point in time?
At the close of the accounting period. So, for example,
That's good.
Okay.
That's good. Thank you. Harrison,
Yes, that was the point I was going to make. Closing balances.
Okay, closing balances. You're lucky. Okay, that's fine. Okay, so from which data do we strike the tribalance? From which data do we strike the tribalance from? Festus.
From the ledger book.
From the ledger book.
Yes.
From the ledger book.
Yes, sir.
Okay. From the ledger book is very broad. Specifically what? From which data?
So please, from the journal, the individual journal.
From the individual journal.
Yes, please.
You are talking about ledger, you are talking about journal. Which is which? They are two separate issues. Journal is different from ledger.
Yes, sir.
And who will help? Who want to add to what Festus said? Apau, your hand was up. Have you dropped it? Yes, who will
Yes,
help?
So I was saying from ledger, from journal to ledger, and finally to the tribalance.
Yeah, from journal to ledger, then to draw the tribalance. But from the ledger, where do we extract the figures from? From the ledger.
The account. The ledger.
The
The
individual account.
yes.
Yes. So we strike it from the individual account. And where do we get our data from to generate the individual account? Where do we
The
get our data
transaction.
from to generate the individual account?
Transaction.
Harrison. Okay,
Yes, sir.
Gabriel, thank you.
All right.
Yeah, Gabriel has answered it. From the transactions of the period. From the transactions of the period. So, then I go back. Gabriel mentioned that the journals, we are yet to do the journals. So when we do it, then you get it clear. Yeah, the journals record daily transactions. Then at the end of the period, the journal entries are transferred into the ledgers. Then from the ledgers, individual accounts are opened. At the end of the period, the individual accounts are closed to disclose or determine the closing balances. And from these closing balances, we now strike the trial balance. And when we strike the trial balance and the trial balance agreed, then we use the trial balance entries to prepare our income statement. To prepare our final account. To prepare our final account. I withdraw the income statement because income statement is a subset of final account. So we use the trial balance figures to prepare our final account. And when we talk of final account, what does it comprise? What does it comprise? What are the subset of items in a final account? Two hands are up. Who else? Okay, Harrison.
Sir, please, one of them is the income statement.
One of them is the income statement. Festus.
So,
Festus.
statement of financial position.
Statement of financial position. Rebecca.
Yeah, please, the cash flow.
The cash flow statement. Okay. All right. Thank you very much. All right. So now we have done up to the trial balance. Festus, your hand is up, or is it an old one? Harrison.
This is the old one.
Okay, Harrison.
Yes, sir. So you made mention, you pointed out that from the trial balance, we prepare our final account. Now, where the trial balance doesn't balance, what happened? And must it always be that the trial balance should balance, and where it doesn't balance, what happens?
Okay, great, good question. Now, when the trial balance doesn't balance, you have to correct it. It means that you might make some entries in the ledgers which are not correct. So you have to go back and correct the trial balance. So we have a topic in accounting known as correction of errors and striking of the suspense account. So we use correction of errors to correct the trial balance. But what we are saying at this point is that all other things being equal, our trial balance agrees. But you must also note that the trial balance can agree, but there could be errors. And so, all other things being equal, we are stating that we are using the caveat that the trial balance has agreed and there is no error. So we can proceed to prepare the final account. But where the trial balance does not agree, then you have to go and correct the errors. You have to take your time, go through the individual transactions, look at the ledger entries, and do the necessary corrections. Is that clear, Enim?
Yes, sir. But that is going to be a heavy task, isn't it? Going back to the individual entries.
Yes. And so that is why, as a bookkeeper or as an accountant, when you are making the entries, you don't fault with it. You do it with all the necessary seriousness and the necessary caution and expertise that you have to undertake. If you cause it, who do you want to come and help you correct it? Workers will close and go home, but the accountant will stay in the office trying to make sure that he or she balances the account before he or she leaves for the house. And he or she might be the first person to come to work the next day to come and work on the account. Exactly. Yeah, Harrison, go
Yes,
ahead.
sir. But is there not a very short way, like the introduction of the suspense account into the trial balance? Then later you go and look for the error or the mistake
So,
that you.
so where you are under pressure to submit your final account, you can use the suspense to balance the trial balance, and
Okay.
use the suspense as an item to prepare your final account.
Okay.
But the moment you submit it for scrutiny, especially for board of directors to scrutinize, you have to make sure you sit up to look for the errors and get it ready for your external auditors to come and audit. Because external auditors, when they come and the suspend is still hanging, if they have to do it for you, they will charge you extra.
Oh, okay. Okay. Okay.
Because you can't use suspense as an item to file your returns at the Registrar General's Department or to file your returns at GRE. You have to clear it. You have to correct it and clear it to zero.
Okay.
Any question again? Okay, I think we can make progress. So, today we want to look at this slide, and then after that, we'll take a question if there is time. So let's go through this slide. Can you see it?
Yes, sir.
Yes, sir.
Yes,
Okay. Okay. So, we want to look at the income statement. So when we talk of income statement, the income statement is one of the tools that we use to measure performance of what? Business managers. The income statement is used to achieve set targets in terms of performance. And when we talk of targets, it could be profits, and the profits, it could be profit or losses or break even. But normally, investors will look out for profits, and they will set a target in the budget for the level of profits. Now, at the end of the year, the income statement that is prepared, issued to board of directors, or board of directors will look at the figure compared to the budgeted target. If it is not up to, then questions will be asked of the general manager to explain why they couldn't meet the target. And the general manager will get a briefing from the accountant, sales department, and what have you, to be able, even R&D department, that is research and development department, to be able to arm himself in case it happens to be the same when they meet shareholders. So, by the end of this lecture, we expect that you should be able to explain why income statements are not part of the double entry system. Explain why profit is calculated. Calculate the cost of goods sold and gross profit and net profit. Explain the difference between gross profits and net profit. You should be able to also prepare a simple income statement from information given in a trial balance. And then you should also be able to explain the relationship between trading account, and profit and loss account. Then it should be able to explain how trading account and profit and loss account fits together to create the income statement. And then they'll explain how to deal with closing inventory when preparing the trading account section of an income statement. So why income statements? Income statement help the business to plan ahead. So 2025 income statement will speak volume to the business owners, and the business owners will, based on that income statement, to plan for 2026, to strategize, to surmount the pitfalls, and hold on to the successes or improve upon the successes to create wealth for shareholders. It will help obtain loan from banks, other businesses, and individuals. Every financial institution that a business wants to sought for loan requires at least 5 years running financial statement. And the period in which they are seeking the loan, they also require management account from them. In order for the credit department to study and convince themselves that the loan that the business is requesting for, they can pay the interest that will accrue on it, as well as the principal when they fall due. The same thing applies to individuals. Individuals will also want to be sure that when they give out those loans, per your income statement, it is possible that if you should maintain the same performance in the subsequent years, you can pay off the credit facility that they might give you. It will also tell prospective business partners how successful the business is. So the income statement is used to convince prospective investors. No investor wants to invest in a business which keeps on making losses. But some investors want to buy a business which is making losses rather than a cash cow business. It tells a prospective purchaser how successful the business is. So, investors are those who buy shares in the business, or those who buy or acquire the business entirely. Then it will also enable the calculation of tax payable to tax authorities. So as a business, if you prepare your income statement, you'll be able to know how much tax liability that you have to pay to the GRA. But then if you don't prepare your income statement, and over the years, I think during the previous administration and even recently, Abosokai people complaining of they not making sales and so they can't pay tax. How is that possible? The tax authority will not listen to anything from you. Or that they will say, okay, if you are not making profits, give us your income statement. Let's study it. Because some of the income statements, some of the items that are captured as expenditure are disallowed by GRA, and it will be added back to profit or loss to determine your chargeable income. And so, as a business owner, if you feel, a moment, please.
He said we should give him a moment.
Sorry, I was in a call. Let's move on. So, if as a business owner, and this has been going on, you see GRA authorities coming over and using their padlock to lock shops. And these shop owners will now be fighting with the GRA authorities that they have not made any profits, and the authorities are chasing them for what have you. No, you don't have any business to do what? To complain about you not making profits. All that you need to do is to what? Is to use your income statement to prove to them that you are not making profits. And that's it. Just use your income statement to speak for you. And so those of you who have businesses and you've been having these challenges with tax authorities, I think you'll be advised from today to do the right thing. Okay? You don't blame tax authorities for chasing you to pay your tax obligation. If you want them with what? Your income statement. That's all. Okay. Any question on that? Any question? Okay, let's make progress. Now, the format for calculating profit is as follows.
Oh, so I raised my hand. Sorry.
Okay, yeah, let's go.
Okay, so I've seen instances where, especially Melcom, when you go to Melcom, you see, but now they are not doing it. You see the GRA people sitting close to the the tellers or the cashiers, and they will be recording the transactions. Why do they do that?
Okay. The reason why they do that is that they are looking for withholding taxes. You know, what we are talking about here is profits, net profits, which is taxed at a rate of 35%. Okay, so we are looking at profits for the period. But when it comes to where GRA goes to sit at the various business operation joint, here GRA is looking at whether these businesses are issuing the right receipt. Are they issuing the right
invoices?
VAT invoices and then VAT receipt? Because some of them don't issue those receipts. And when it happens like that, at the end of the day, the tax that they have collected, goes into their pocket. It's just like you and I, who does not want to be citizens. You go to a shop to buy an item. You've seen that it has been indicated on the they have pasted their VAT certificate on the wall. But you and I refuse to take our VAT receipt when we buy. At times, they even give us an invoice representing a receipt. Not that they don't know that they are supposed to issue VAT receipt. They know, but they don't want to account to the GRA the amount of the amount of VAT they've mobilized on behalf of the state. So they always want to hide and steal from the state. That's why GRA said, okay, don't worry. Over the years, you have been under declaring what you make. So this time around, I'm going to put my officials there. Anybody who comes to buy from you, my officials will make sure that the person is coming out with a receipt, which is what? Which is required by GRA. Am I making some sense here?
Yes, sir. Yes.
So that is why those actions were taken by GRA. But one thing about we, the citizen, is that we fail to be Ghanaians, is that we fail to be citizens. We condone stealing. We condone corruption. We condone criminality, which is very bad on our part. You go to a shop to buy. You know that shop, there is a display of VAT registered institution. And then you request for a receipt, and the person pull out an invoice or VAT compliance. Do you have to accept it? No. You reject it and tell the person that, give me a VAT receipt. The moment you ask, the person will pull out the VAT receipt for you. If he says he doesn't have it, tell him, take your goods and give me my money, and go to a different shop to buy. Okay, so that is the reason why GRA adopted that system, in order to mop up money from these businesses. They shouldn't have stopped. We need a lot of employment for our youth. They should have continued and make sure they put them, especially the supermarkets, and then these Abosokai people and cosmetic shops and cosmetic shops. That is what they do. They will take the VAT from the customer, but they will not disclose it. The reason why I said they will take the VAT from the customer is that the goods price is VAT inclusive. So when you pay that money, 10 cedis, there is VAT that has shot it up to the 10 cedis. So if you don't take the receipt, the VAT receipt, they will not account for it to GRA. Because at the end of the day, what they recorded in their VAT book is what they will disclose to GRA. Can we move on?
Yes, sir.
If there is any business owner here, that is what they do. I'm just exposing them. Don't mind them. They shouldn't get annoyed with me.
That's it. The presence of this GRA staff, they were creating confusion, especially at the beaches. I witnessed one.
They were not creating any confusion. Just go according to what they say you should do. Issue the receipt. They will take the receipt and look at it. If it is VAT receipt, they'll let you go. But if it is not VAT receipt, they will accost you and take you back to the shop owner for the shop owner to give you the right receipt.
So why have they stopped?
I don't know. Politicians, they're always afraid when it comes to votes. I don't know. This is sickening. They should have. There are a lot of youth out there needing job. They should have just employed them and then throw them into the system, and then get supervisors and then security officials to be going around. If there is any problem, they report, and then they accost you, they arrest you, the shop owner, there and then. No confusion, and people will fall in line. Let's move on. So how do we calculate profit? Income statement is a summary that is not part of the double entry system. The income statement, it doesn't follow double entry system. Take note of that. The trading account is calculated to determine the gross profits. So in the income statement is made up of two parts, the trading aspect and then the profit and loss aspect. The first aspect is the trading account. And in that account, we determine the gross profit. So when you prepare up to where you determine gross profit, you are done with the trading account. Then you go ahead to add other income. From adding other income, you are moving into the realm of determining the net profit or net loss. So you add other income, then you less operating expenses. So if your total operating expenses is less than the total gross profit, you are making net profit. If it is the other way around, you are making net loss. If they are equal, you are making no profit or no loss, and we call it break even. The profit and loss account is prepared to determine the net profit. Yes, both detailed statements are part of the double entry system. That is the profit and loss account and the trading account. They are part of the major double entry system, meaning that the expenses are the debit side and then the income is at the credit side. Take note of that. But when we use the vertical format, we bring the income first and then later on we bring the expenses. That is how come we use the income to determine the gross profit and then we use the expenses to determine the net profit. The trading and profit and loss accounts are both together and summarized to create what is known as the income statement. Okay, what is known as the income statement. What is gross profit? A gross profit is the excess of sales revenue over the cost of goods sold in the period. Note, where the cost of goods sold is greater than the sales revenue, the resultant result is what? Gross loss. The formula is sales minus cost of goods sold is equal to gross profit or gross loss. Gross profit slash gross loss. Okay. What about net profit? The net profit is what is left of the gross profit after all other general and administrative expenses or operating expenses are taken from it or are deducted from it. Note, where the costs used up, that is the administrative expenses or general expenses or operating expenses, where the costs used up exceed the gross profit and or plus other revenue, the result will be net loss. And so the formula is gross profit plus any other income minus expenses will give you what? Will give you net profits or net loss. Take note of that. Okay. So that is what we have. Okay, let's make progress. Please, if you have any question, you can raise up your hand and ask. Right.
All right.
How to draw up an income statement. Please, the Word document that I shared with you, there is the format for income statement and a statement of financial position. Please, do you have it?
Yes, sir.
Good. All right, so we're going to apply it. All right, how do you...
I think we've lost him.
Hey,
Uh,
I'm trying my possible best to hear whether maybe network is you. Whoa. I saw Kasa here come to me, Brett.
But your Word document now or can't was on your friend to page no back now. You move and some kind of back one, Pamacho.
Joseph. Joseph.
Yeah, Gavin, I'm here.
Charlie, you go if you call him. You go
Yeah,
off.
yeah, I'm calling him.
Hmm.
He come.
Okay, it's back.
Hello, sir.
Back, Joseph.
Yeah, okay. He's back, please.
Let's move on. Sorry about that. My file went. The opening inventory plus purchases minus cost of closing inventory, that will give you your cost of goods sold. So when you take the document that I shared with you, you see opening inventory, add purchases, less closing inventory, then you arrive at your cost of goods sold that you use to draw your income statement. Let's move on.
Hello, sir.
Yep.
Sir, what about after the purchases, you less the purchases returns or return outwards?
Yeah. What I'm saying is more or less there is no
Summary.
returns.
Okay. Thank you, sir.
So when we get to the format, we'll look at it. Okay.
Okay, sir.
All right. So we move on. And so step 4, calculate the gross profit by deducting the cost of goods sold from the sales. And you arrive at either your gross profit or gross loss. I'm using gross loss. I'm adding the loss to it because it is possible for you to make what? Losses. For a business to make losses. Step 5, close the account that should appear in the trading account by transferring their balances to that account, okay? Then how do we draw the income statement? So we draw up the income statement as follows. Sales less cost of goods sold, then we arrive at your gross profit. And then you less expenses, then you arrive at your net profit. So if you have, or should I share mine? Let me see if I have mine here. And let me share it so that you see the format I'm talking about. Let me stop sharing. Okay. Let me see. Can you see my screen? Hello?
Yes, sir.
Yes, sir.
Yes, sir.
Hi,
Yes,
sir.
sir.
Yeah, we can see it.
Okay. I'm coming. Okay. Right. So then from there we'll look at the effect of net profit on capital. What do you think is the effect of net profit on capital? And that will be the last item, and we have sample questions then we'll solve. Let's talk about effect of capital, then I'll take you back to the formats. What do you think will be the effect of profits on capital? Yes. Yeah, Harrison.
Yes, sir. Sir, please, I think it will increase your capital.
You think?
Yes. Because I'm learning. I may be wrong.
Yes, it will increase your capital. That's correct. So
Thank you, sir.
At the end of the year, you have in your hand 120 Ghana cedis. So you ask yourself, where from that 20 cedis? We simply said it is what? The profit. So the effect of profit on capital is that it increases it. What about effect of? Yeah, Gabriel.
So the same way it will decrease too, right?
It will decrease it. Okay. All right. Thank you. What about break even?
It will have no effect.
It will have no
effect.
It will remain the same.
It's the same thing.
Gabriel, your hand is still up. Okay,
Sorry, it's the old one.
Okay, all right. So I'll stop sharing this and share my Word document for us to X of sales, less then gross profit, less expenses, net profit. We are going to use the format to expand this. It is not as simple as you see it. So I'm stop sharing.
Hey, accounting.
And then I'll go and share. My Word document. Please, if you have any question, you are at liberty to ask. Can you see now?
Yes, sir.
Yes, sir.
Okay. All right.
Sir, please zoom. Can you zoom it a bit out? You can zoom it out. Okay.
So let's look at it. Let's go through to use the question that I will give you to solve it yourself. All right. So we are looking at the format of the income statement. Format of the income statement. So sales. Sales can either be, in some question, you can come across revenue. In others, you can come across turnover. And then in some books, you come across takings. Takings. They are all the same terminology. They all represent sales. Okay. So, but in our setting, we normally use sales to fast track our understanding of whatever we are doing. All right. So sales basically is used for those who sell, merchandise businesses, okay, or those who buy and sell tangible goods, or those who manufacture and then what? Produce tangible goods. What about those who render services? What terminology do they use? Those who render services. Festus.
So I think it's the same sales.
Are you sure?
Yes. I stand to be corrected though.
Is it all of them?
To those that I know.
Okay. Example of those that you know.
So let's take MTN Ghana for example.
MTN Ghana.
Yes, sir.
They sell credit.
They render services.
They render services, and they call it sales.
Yes.
Okay.
To the best of my knowledge.
Okay, that's fine. No problem. Okay, even MTN.
Okay.
MTN, they render service and they charge us fees, but they sell credits for us to be able to access the services, isn't it? So there's credits or the airtime or the data that they sell, out of which they charge us for using their network. Okay. So when it comes to service-oriented business like schools, how do they call their revenue that they receive? Schools.
Fees.
When you go to when you go to DVLA, you go to any of the governmental institution, lands commission to assess services. How do they call it?
I think fees and charges.
Service
Fees
charge.
and charges. So services are more tilted towards using the term fees and charges. Okay. All right. So I just want to find out if you have knowledge in that. Let's move on. Right. So we have what? Sales. So let me take those takings and revenue and turnover, all those things out so that we can see have a simple format. So we have sales. And sales, the possibility of some of the goods originally sold being returned back to the business must be accounted for. And so if there is a returns, that would be sales returns or returns inwards, meaning that what we sold, some of them has been returned back to the business. So if we had sold 1,000 cedis and 100 cedis has been returned back to the business, our sales will no longer be 1,000 cedis. It will be what? 1,000 cedis minus 100, which has been returned. 900. So that 900 becomes our net sales. It becomes our net sales. So that is why you see sales less returns inwards. Then we arrive at what? This figure that I've highlighted is known as what? Net sales. Then from there, we look out for our cost of sales. Cost of sales. And when we say cost of sales, what it means is that the cost we incurred, the direct cost we incurred to be able to make this net sales, that is what we are looking for. So we have, if the business has been in existence for more than one financial year, then that business will have an opening inventory. But if the business is in its first year, there wouldn't be anything opening inventory, but there will be closing inventory. So we assume that this business has been in existence for more than one financial year. So there is opening inventory. And this opening inventory, what it means is that you bought goods worth 1,000 cedis and you are able to sell 900 cedis. You are left with 100 cedis for the next period. That 100 cedis that is left for 2025 becomes your closing inventory. Then when you come to 2026, January, that closing inventory becomes your opening inventory, your beginning inventory. Then that is not the only thing you sell for the year. you buy more to sell. So you add your total purchases for the year to it. And your total purchases might be adjusted. You see how we adjusted the sales. It is possible we might adjust the purchases. And what are the things we use to adjust the purchases? Returns outwards or purchases returns, meaning that the goods we bought for the year, some of them were not in good condition, so we have to return it back to the owner. When it happens like that, the purchases for the year will reduce. Then there is also a situation whereby the owner of the business might decide to take some of the goods for personal use. For personal use, for a gift to the pastor, for a gift to the wife and children, for a gift to the shop as attendant, and all those things, where he or she will not pay. So that would be drawings, meaning that that business owner took physical goods. So it will affect the purchases. It will reduce the purchases. So drawings. Then carry it inwards. When the owner of the business went out to buy the goods, he boarded a Kia truck or chartered a container, an articulator, or what have you, and paid the driver to bring the goods to the business premise. Inwards. Cost of bringing the goods to the business premises. So when we do this, purchases returned, you subtract it. Goods withdrawn, you subtract it. Carried, you add it. Then the net purchases is what I've highlighted here. Then this net purchases, this net purchases will be added to the opening inventory. The one I've highlighted. This will be added to this. The two yellows will be added together.
Yes,
and
sir.
Then is somebody calling me?
Yes, sir. Sir,
Yeah.
Afo. Sir, your sound went off. I don't know whether you can go over from the goose withdraw because your sound was not
Withdrawn, eh? Okay.
Yes, sir. Thank you,
So
sir.
I'm saying that goods withdrawn is a situation whereby the owner of the business who just called me? Who just spoke?
Afo, sir.
You have a mobile phone shop. You have a mobile phone shop, and you've gone to bring latest Samsung or whatever. And your daughter is on your neck that her phone has spoiled. So give her one of the phones. The way she is disturbing you, you decided to take one. And that goods withdrawn, if you were those Samsung phone, you have taken one for your daughter. Would that be 200 again? No, it will reduce to
network.
Sir, please, can you position
199.
yourself?
And then we now get a figure that the money you pay freight charges to import the phones into the country you add it to it as what? Carried inward to arrive at your net purchases. And this net purchases, which I've just taken the yellow off and I've highlighted again, will now be added to the phones that you had in the shop from 1st January. Then you arrive at your what? You arrive at your, how do we call it? This one, you arrive at your cost of goods available for sales. Cost of goods available for sales, which some will refer to as COGAS. Cost of goods available for sales. Then this cost of goods available for sales, you now less, definitely you can't sell all. The net purchases plus the opening inventory, you can't sell all in a year. So you now less your closing inventory. And that closing inventory, you have to do your stock taking to know the value of your closing inventory. So you take the value of the closing inventory for your cost of goods available for sales. That is the total goods available for you to sell for the year. If you take your closing inventory value from it, you arrive at your cost of goods sold. You arrive at your cost of goods sold, which is the lemon green I've shown. Then this cost of goods sold will now be taken from your net sales. And when it is taken from your net sales, you arrive at either gross profit or gross loss. You arrive at gross profit or gross loss. Then the next thing for you to look out for is what is termed as other income. Other income. There are some income that a business makes from, not from sales, but from other activities. One of them is discount received. When the business goes to buy, the business is granted discount. It could be cash discount, it could be quantity discount, it could be what? Trade discount. Discount received. Accountant will want you to quantify it, value it in monetary terms. Then we also have what? Discounts, a dividend received. Dividends received. We have dividends received. That is, the business, having made profits over the years, has invested some of its profits into shares of other companies. So at the end of the year, the dividend that they receive is form part of their other income. It is not from sales. Discount received is not from sales. That is why we bring them here. Then you also have commission received. If the business has worked for a company and the company has granted the business commission, then it will also be added. Then you have rent received. Rent received, we are looking at where the business has too much apartment and has decided to sublet some of the apartment. The rent that they will take from their tenants is rent received. It also forms part of other income. Then we have interest received. Interest received. The business might have what? A bank account, a savings account, where the bank pays interest. Where the bank pays interest on it. If it is a current account, the bank will rather be deducting interest. Or the business has what? Invested in the bank's product. Something like T-bill, call account, fixed deposit, or something like that. So interest received also form part of other income. Then we have something we call provision, decrease in provision for doubtful debts. Every business creates a provision for losses. And this provision for losses is known as doubtful debt. a debt that you doubt that you could receive after selling on credits. Some of the debtors will not honor their obligation. So you make a provision for it. When the provision increase, then it will go to the operating expenses. When it decrease, then it means more of the customers have come to pay. So the decreased amount will be added as what? Other income. Then we have what? Profit on disposal of what? Non-current assets. The company is having a van. After using it for its useful life, the company decides to sell it. After selling it, the accountant will now do what is known as provision for depreciation, accounting for provision for depreciation account, provision for depreciation. And out of that, they will prepare a disposal account. And the disposal account will disclose profit or loss. If it is profit, you add it to other income. If it is losses, you treat it as operating expense. So when all this is done, but note that in a particular question, none of these might be there. In a typical question, none of these might be in the question. So you don't bother yourself. The same way, not all of these will appear in one question. It could be one or it could be two. So take note of that. This is just a format I'm discussing with you. That is why I've brought all that you should expect. It could be that in a typical question, it will be zero, none. Okay. Then any of them that you find here, you add it to the gross profit or gross loss. Then you get your total income for the period. Excuse me. You get your total income. Oh, sorry. You get your total income.
Sir, please, your hand is up.
Yeah, let's go on. Let it roll.
All right, sir. Sir, the other incomes, be it the rent received, interest received, commission received, they were not earned out of sales or the trading account. They were not sales out of trading. But the eventual effect is that expenses will be deducted from them. So I just want to ask, why are other incomes affected by expenses? Why is it that we don't add it to the capital, since it is an extra money for us? Why should expenses be deducted from them?
Okay. From what processes did you get this other income? Is it not a business operation?
So, for instance,
you made those other income from the business operation for the year. But the only thing we are saying is that they are not sales. You didn't make them from sales. For instance, discount received was as a result of buying purchases. Dividends received was as a result of investing in shares. But they fall within that year. So they are part of income. Note that gross profit is an income.
Okay.
It's an income for that year, but that one is from sales.
Okay.
Then we have some income for that year, but they are not from as a result of sales. So we need to put all of them together for the year. Am I making sense?
Yeah, yes, sir.
So can we move on?
Yes, sir.
Or you still need some explanation?
Oh no, the point I just wanted to get is that they are not those interests or those other incomes, they were not earned from trading.
From trading. You're right. You're right.
Yes.
But they were earned from that year.
Yes. And it is the it is the business.
That year we are putting all the income that the business generated together.
Okay.
One of them is from sales, and others are not from sales.
Okay. Okay.
Are you okay?
Yes, sir, please. Thank you.
All right. Any other question? Please ask. So some of you have businesses and your auditors do prepare your financial statement for you. So this is the time for you to ask, because at times they submit the financial statement, you just be seeing figures. The only thing you look out for is net profit. Some of you even look out for total expenses. Hey, me expenses also, Papa. Some even look out for tax payable. So you are learning something here. So please, the one that applies to your business, ask. Or none of you have business? Some of you have businesses, isn't it?
Yes, sir.
Good. So take advantage and ask what you don't understand. All right, let's make progress. Then we come to operating expenses or general. These are general expenses that you incur to run the business. And without these expenses, the business cannot make the needed income. Here, the rate is payable to the district assembly or the metropolitan assembly that you find yourself. The rent is paid to the shop to what? Rent, or still paid to metropolitan assembly. Maybe you have put your container somewhere and they come around and take you rent for the land that you have put the container. You are using your own building, family building, to do your business, provision shop or what have you, tailoring, seamstress or what have you. At the end of the year, you don't pay any rent, or at the end of the month, you don't pay any rent. And when you are asked, you say that, but the business, the house is mine and the business is mine, why should I pay? You have to pay rent. You have to deduct rent so that you know the true profits that you have made. And that rent, you can put it in an account somewhere so that if there is any renovation work to be done, you fall on it and use it to do it. Lighting and heating. You use lights for visibility. You use heating to cool. You use heating to warm your warehouse or your store. But in our part of the world, instead of heating, we use what? Cooling. We use air conditioning to cool, to control the temperature in our offices and in our shops. So you pay for it. You also pay for wages and salaries. You pay for workers. Advertisements. You make adverts so that you can sell. You travel and you pick transport. You pay for it. Bank charges. You operate bank accounts. So the bank charges you for being a watchman over your money, or for you to access their services. Interest on loan. When you take loan, the bank or the loan giver charges you interest. Business promotion. Business promotion. What is it? Who can tell us what business promotion is? Business promotion.
Let's take it. Maybe you want to advertise your product either on television.
Did you put up your hand?
Yes, please. No, please, sir.
So do the right thing. Okay, go ahead. You are already airborne. Go ahead.
So now my hand is up.
Go ahead.
Okay.
Go ahead.
So basically, what I was saying is, when you want to advertise your product either on TV, radio station, billboards, or those things.
Okay. How is it different from advertisement? How is business promotion different from advertisement? Festus. Oh no. Assembly Elsie. A lady has come on board. Let me call her. Harrison, mute yourself. Let's Elsie talk. Elsie.
Yes, sir. Okay. The difference between
We can't hear you, Elsie.
Hello.
Better now.
Please, the difference between the advertisements and promotion is with advertisements, maybe you're just showcasing the product. Let's say if it's a new product, you are showcasing it to people so that they'll be aware of it. But with the promotion, you can reduce the product you are selling at a cost so that people will come in for it. Or it's also part of the advertisement. But this one, you are doing it, you are making it available to people so that they can buy it.
You are doing it with an incentive.
Okay, yes.
The business promotion is with an incentive, like you said. You are reducing the prices. Is that not an incentive?
Yes, sir.
Good. Crispin.
I want to find out what's the difference between reduce to clear and business promotion. So that's what I want to find out.
Okay. Reduce to clear and business promotion. Hansen.
Okay, sir. I think basically they are the same, but promotions are, I think discount giving. Promotions are discount giving to promote or to maybe still further promote advertisement, and then the reduce to clear. I think it is also a form of discount, but just that they want to maybe clear the old stock for the period. So I think they are all, they are all the same. Yeah.
Okay. All right. Sophia. Sarafina.
Yeah.
Sarafina.
Yeah. I was also going to talk about the advertisement and
Go ahead.
that one is when you paid for ad, like when you pay for your product to be advertised on television and other mediums for communication. And then with the promotion, just as Elsie said, when you give a discount on your products.
Okay. Thank you.
Yeah, welcome.
Yeah. Joseph Afo.
Yes, sir. Thank you, sir. Sir, I also want to share an idea about the business promotion and then advertisement. I think the business promotion is all about the activities company does to attract customers and then increases. And then the advertisements is just a way of promoting where the business is communicating about the product or its services. Thank you, sir.
Good. So the promotion, there are activities. Activities like what? Activities like what? Gabriel. Okay, Hansen.
Yeah.
Yes,
Oh,
sir.
Gabriel is on board. Gabriel, activities
Okay.
like what?
Yes, I want to say something about the reduce to clear and then the promotion. So
Okay,
in
go ahead.
Ghana, for example, in Ghana, we all know that anytime we see reduced to clear, it's either the product is close to expiry or they are expired. And then also, so I think it's the reason behind it that makes it the difference. So why are you doing reduced to clear? Maybe it's close to expiry dates. And also, why are you doing the promotion? Maybe there are
Okay,
more competitors in town and you are trying to attract more customers. So you reduce a bit to gain the popularity or get more customers.
good. Today my class is very, very lively.
Will you
Kudos
give
to
me
all
marks
of you.
today? So you have to give marks. So
I will do. Don't worry.
At
Don't worry.
least 5 marks.
I will do.
For you.
Don't worry. Let's move on.
but the way
Hansen,
you started there
Yes,
scared
sir.
us more.
the way
Yes,
I
sir.
started is schedule.
I say,
It's part of life.
Me
Don't you
too.
see how the sea behave? Have you been to the seashore before?
yes,
How does it behave?
the storm, the waves.
Uh-huh. Uh-huh.
But you later enjoy the breeze.
Uh-huh. Uh-huh. So it's part of it. Myself, I was frustrated. I was late. So I was, and I was stuck in the traffic. That's why. But
Oh,
it's part of teaching. Okay.
okay. Thank you.
All right.
So
Yeah, Hansen,
it's part of
let's go.
account.
Yes, sir. So we're
It's
talking
part
about
of
the activities.
accounting. Yeah,
We're talking
activities.
about activities. Yes, and
Uh-huh.
one of them is buy two, get one free. It can also be one of
Okay.
the buy two, get one free. Mm-hmm.
Okay. Somebody want to add? Dixon. Okay. Oh, Dixon has dropped the hand.
So I'm here, sir.
Okay, Dixon, activities.
Okay, so like they will introduce coupons and vouchers.
Coupons and
Maybe when you
vouchers.
buy,
Good.
you get some coupons and vouchers.
Okay, that's great. Fidera, Phaedra, Suleimana.
Yes, sir. Now, please, some of the activity is reducing or giving discount for a number of quantity that one purchase.
Okay, that's good. But have you people also noticed that during promotion, at times they even go on float?
Yes, sir.
They go on float
Yes, sir.
where they recruit some beautiful
Yes.
succulent ladies
Young
wearing
girls.
And boy.
young girls wearing their branded
T-shirts.
wearing their branded t-shirts with some good music.
With big
At times they even go and set up somewhere. In traffic, some of them will be asking you to roll down your glass so that they talk to you about the product and all that. Do you see that?
Yes, sir.
Yes, sir.
Good. So these are all business promotion. That's good. Let's go. Let's move on. Then we have provision for doubtful debts. So here, every year, Elsie, your hand is up.
Yes,
Assembly.
sir.
Go ahead.
I wanted to ask, when it comes to schools, with schools that also go for floating, so with them, how are you going to call it?
Yes, they are also trying to advertise. It's a form of selling the school to the general public.
Okay.
So it's a form of advertisement. It's a form of promotion to get more parents to bring their word, to entice children to disturb their parents to take them to that school. So you see them in their colorful dress and all that, and just to announce to the public that they are also around. But when they add inducement to it, then it becomes the promotion. You get it? But most schools don't add inducement. They throw out their flyers to educate the general public on what they are able to do. Okay, all right, good. Then we also have depreciation. Anytime an asset is used, it depreciates. If you want to have a look at it, look at a car which is registered. Okay, don't let me even use car. The phone you bought about 5 years ago, its functionality is not the same as a brand new phone that you might bought today. I said brand new phone, not the one you go and do swapping, where they'll do you 419. So
Yes,
depreciation.
So you mean the second one?
The second one. Swapping, then they will give you
key soup.
They will give you yam or key soup.
Yeah, key soup.
Okay. So, do you know the business uses its vehicle to generate income? And this vehicle, as you use it, or the building, as you use them, they tend to become weak. Their strengths tend to come down as and when you use them. So, definitely, that cost incurred in buying that vehicle or putting up that building is being eaten up by generating income. So that cost that is being eaten up must be used as an expense against the business income. Are they?
I wanted to say, yes, sir. I wanted to say that you didn't finish with the provision for doubtful debts, or I don't know if you go back.
Okay. I'll go back to it. I intentionally did that and see if you guys are following.
Okay, sir. So please, my question on the depreciation of the depreciation expense.
Yeah.
Sir, so what is the idea behind providing for depreciation? The idea, is it to accumulate money to get or replace that asset?
So you have answered the question. The essence is to accumulate money so that when the time is due for you to replace the asset, it becomes easy. So me, when I'm auditing your business or when I'm advising you on business issue as your business advisor, the first thing I cause you to do is to open an escrow account. So that at the end of the year, any depreciation that we calculate, you go and deposit the cash into that account. And for some time, you now invest it. Because the essence is to replace the asset in future. But most businesses don't put the money, don't take the fiscal cash and put somewhere. So the money is in their pool and then they tend to use it up. And when they are ready to replace the asset, there is nothing to show. So they go out to go and borrow money or go and borrow the asset. So you have answered the question. That is what it's supposed to be. But people take it to be an accounting concept. But in reality, you have used it to reduce your profit, just as you have used salaries to reduce your profit. But the salaries, you actually gave it to somebody. So why don't you also put that depreciation somewhere? Okay, Crispin.
So let's take it like a transport company, periodic servicing.
Yes.
Does it fall under depreciation of fixed assets?
Okay, Crispin want to find out periodic servicing.
All right, sir.
Does it fall under depreciation? Who can help us? Raise up your hand.
Sir, no. Sir, it doesn't fall under depreciation.
I said you raise up, you start answering the question before you raise up your hand.
No, I raised it too. Anyway.
Okay.
Anyway.
Crispin, Harrison is saying it doesn't fall under depreciation. So Harrison, where does it fall?
It falls under it falls under expenses on the particular.
It falls under the normal operating expenses.
Yes.
Or it falls under repairs and maintenance expenses.
Maintenance.
You know this, so?
Yes.
Okay. Festus, then Kingsley. Festus, your hand is up.
Sir, you said it all, sir.
Okay.
Thank you.
Kingsley.
Yeah, sir. Thank you, sir. Yes, sir. On the same question. What about if this time we are looking at maintenance on the buildings? The money you use to maintain the buildings, does it also fall under depreciation of its asset or maintenance?
Okay, so in normal sense, okay, somebody want to respond? Yeah, let me give you the opportunity to respond. Okay, who want to respond? Festus or Hansen?
Harrison, sir.
Harrison.
Yes,
I say Hansen. Harrison.
Yes, so when we talk of depreciation, we are concerned about the fall in value of that particular asset. But with normal maintenance, repairs to this one, they are all their normal operating expenses. So that is what I can say.
You are right. You are perfectly right. Repairs to building. Kingsley, repairs to building, we have two types. We have a major repairs that brings about improvements in the holding capacity of the building.
Yes, sir. Yes, sir.
Then we have a minor repairs, like cracks that is being repaired, walls falling that is being erected back, painting, and all those things. They are the normal repairs and maintenance. But if we are breaking down the wall to extend the building, to add more rooms to it, then that becomes a capital expenditure, which will be capitalized to add to the cost of the building. And we are not there yet, but that is how we treat it in accounting. Now, in accounting, land and building normally appreciates. Land and building, premises, normally appreciate. So we don't normally see depreciation on land and building. But if the land is a mining land, it's an agricultural land, it's a land or building, you know the effect of sea breeze on buildings and land. Agricultural land, the more you farm, the more the nutrients in the soil erodes away. How do we call it? Erosion also takes place. Then we are also talking about I think that's why farmland, land which is closer to the sea, building closer to the sea. So these are the rare ones that we depreciate. But aside that, in normal sense, land and building appreciates. Is that okay?
Yes, sir.
Yes, sir.
The one who asked the question. Okay.
Yes, sir.
All right. Thank you. Let's make progress. Then provision for doubtful debts. Yeah, Harrison.
So I wanted to ask
Harrison.
the appreciation. Yes, sir. Yes, I wanted to ask the appreciation of the land and building. Is it increase in value? Does it mean the value of those assets would have to get increased? And when if it is so,
valuers to come and you call valuers to come and revalue so that you place the new figure in the account.
Okay. So that is the treatment I wanted to ask.
Yeah. Okay. And you have to apply to the registrar of company and apply to GRA as well before you can apply it on the account. Okay. Then we come to provision for doubtful debt. Anytime a business engages in selling on credit, the business must create provision for a debt that a debt that cannot be recouped. And normally, in the early years of the debt, we use a smaller percentage, like say 0.5 or 1%. But as the debt grows, as the age of the debt increases, you have to what? Increase the provision. 2, 3, 4, 5, 10, 15. Then that debt, when it falls within the threshold of the company policy to be written off, then it will be written off. But until it falls into the policy, it will start building up provision from a lower percentage up to when it will get to be written off. So, what are the credit sales we are talking about? Even if the business sells and take check, until the check goes through, it is still credit sales. If the business sells and take cash, that one is cash sales. If the business sells and take bank drafts, that one too is cash sales. Then the business does credit sales. That one too is there. So the one who asks about the doubtful debt, are you okay now? Then we have insurance.
Sir. So, okay.
Go ahead. So what?
Yes, provision for doubtful debts and then bad debts.
Yeah.
As you just explained. So when the provision for that bad debts, it reaches its threshold, it is written off. So at that point, it becomes a bad debt.
It will become a bad debt.
Now, when the provision, the doubtful debt begins to yield good results, like the customers, they are beginning to pay the debt. What happens to the provision? Do you decrease it?
Yes. So that is why in the trading account, you see
the other income.
Yeah, other income. You see what? Okay. Decrease in provision for doubtful debt.
Okay.
There is a way we calculate it. Okay. All right. Then we have insurance. Insurance, we all know insurance. You have to pay for insurance. It's an operating expense. Then donation. As a business, you must also once in a while do donation. Okay. You must also do donation. Then tax. This tax might be the tax from the previous year, not the current year. Because the current year will be calculated on the net profit. Yes, Harrison.
Sir, corporate social responsibility, would it fall under donations?
Yes, it will fall under donation. Yes, it will fall under donation. Approved.
But sir,
corporate social approved by GRA. approved by the state.
All right, but sir, corporate social responsibility, is it not capital? Is it not capital intensive? Is it not? Is it a normal operating expenses? Is it not capital intensive?
Corporate social responsibility, the business will treat it as well operating expense. But then, what are they going to use it for? If they are going to use it to construct a school in the community, it will be captured in their books that they have constructed this for the community as part of their corporate social responsibility. And it will be treated as an expense, operating expense for that year. So if it will take them about 5 years to complete the building, every year, the amount spent on the building will be what? Captured as what? Corporate social responsibility expense. Hello?
Yes, sir.
Wait, the one who asked the question.
Yes, I'm here. I get you, sir.
The one who, are you okay?
Yes, I thought they had, because it is capital intensive, they have a one-off treatment for it. But I get you, that they will spread it. If 5 years, they will be.
Yeah.
I get you.
Yes. If they can complete it within a year, fine. Do you get it?
Sir.
If it can be completed within a year, it will be written off to their expense, but it will be captured in their corporate social responsibility account as how much they have spent. Because the moment they are done, it's not for them again, it's for the community. But they only keep record on it and pictures and all that to boast of what they have been doing for the community. You get it? Look at yesterday, the Black Star, the disgrace that they disgrace us. Which company in Ghana sponsored them?
Goldfields.
Shatawale and Stoneboy.
Are you sure it's Goldfield? Are you sure it's Shatawale and Stoneboy? Yesterday, when you watched the match, which advert were they running?
GCB.
GCB. GCB was their headline sponsor.
A state company for that matter.
State company for that matter. So GCB will go to what? Ministry of Youth and Ministry of Sports and Recreation to take permission to do that. So that when they prepare the account and then they put it in the account as an expense, GRA will accept it.
Okay.
They'll get a certificate for it.
Okay.
Festus, last question, then we draw the curtains down. Festus.
Sir, thank you so much.
Yeah.
In regards to the corporate social responsibility and the nature of some of them, as my brother said, they are intensive. So, for example, maybe let's say company A reside in a community, and then out of their profit, maybe they have taken the responsibility to build maybe a 5 classroom unit for maybe the basic school within the community. And you realize that somehow the objective was to complete it in a particular year, maybe one accounting period. And at the end of the day, they have been able to construct it, but it is somehow expensive. I'm thinking that once it goes to the benefit of the society, and they are to seek permission from probably GRA or any other government institution, I was thinking that the state, in that matter, will also find a way to maybe give them some tax incentives so that it will serve as a motivation for companies to be doing more of that, rather than just treating it as an expense, because that money could have been used for other things. Thank you, sir.
Okay, thank you for the question. GRA will not give you any tax incentive for doing corporate social responsibility. GRA will just allow you to use it as an expense to reduce your income subject to tax, to reduce your chargeable income. But in future, maybe you want a contract, and because of your corporate social responsibility, the governmental institution that you are going to seek the contract from will now be a bit softer to assist you. Or the people in the community will speak for you. But tax incentive, if you do taxation, then you see what I'm talking about. If you want tax incentive, there are areas you have to invest in. If you want tax incentive, you are given the opportunity to recruit fresh graduates, but not corporate social responsibility. Because corporate social responsibility, you are already, that is why GRA don't just get up to accept any corporate social responsibility as an expense. Let's take that GCB decided to go and support Tesano Kifit Club. GRA will not accept it. Because Tesano Kifit Club is benefiting just a handful of people. Huh? But this one is benefiting a national cause, and the governmental institution responsible has approved of it. Any other question?
All right. Yes, sir. So on the social
last
corporate
question.
social
I have another
responsibility.
class.
So yes, sir. So okay, sir. So I think this social corporate social responsibility, a lot of companies take advantage of that because eventually it will reduce the profit for purposes of taxation. So I want to ask: is it always, or is it the mandate of the GRA to always approve of any social responsibility, a corporate social responsibility that a company would want to embark? Is it a GRA that will approve of it?
GRA is looking at the law. If you do taxation, you will come across all those things.
Okay.
GRA is looking at the law. And the law says for it to qualify as corporate social responsibility, it must serve nationally in character.
Okay.
For instance, the school blocks that you are talking about is supposed to be built by government to serve the community.
Yes.
But government resources are limited. And so the community have gone to the company to cry. And the company said, okay, we'll do it for you. 5-unit classroom block. We'll furnish it, provide state-of-the-art computers and what have you, furniture, everything. And then they hand it over to GES. Listen, they will hand it over to GES because it falls under GES. Then the GES will inform Ministry of Education. Then they will do proper handing over. And certificate will be given to the company. Before the company does it, the company will go and seek for approval based on the request from the community. Because the company must know whether if we spend that whooping amount, we will get any benefit from it. And the benefit they will get from it is what? They will be allowed to use it as an expense to reduce their profits subject to tax. And we'll say to reduce their chargeable income.
Yeah.
But not all corporate social responsibilities are allowed. My hometown, we are celebrating Hugbechuchu. Then a company decided to come and support us with 100,000 Ghana cedis. Then they go and tell GRA that we supported Alakla Youth Development Association with for their Hugbechuchu for 100,000 Ghana cedis. So we are treating it as an expense. GRA will tell them, no, you can't treat it because this is not, it is of not national in character. This is an individual in national interest. Thank you. And under which ministry did you go to seek the authority? And where is your certificate? So that is it.
Okay.
Are we clear?
Thank you, sir. Thank you. Yes, sir.
You're welcome. Okay, so in our next meeting, we are going to use the questions under this format to prepare a simple income statement. Then we'll take our next assignment. Okay?
All right, sir.
How many weeks more to go? Hello, how many weeks more of teaching is left?
Roughly 7 weeks.
Oh, okay, then we'll go a long way. Okay.
We beg.
On that,
I'm sure it's 3.
3 weeks more to go. So next week
Yes,
we'll
sir.
do the income statement.
I think
The
next
following
week is
week.
the break, Easter break. I don't know if you are meeting.
And next week, Saturday is Easter break. Yay.
So
Okay.
we have only 3 meetings. One will be face to face.
One will be face to face. Okay.
Last one.
So this one we can do it online. Then we'll do the day books face to face, and we'll wrap up the semester. Okay. We'll see what we can do.
Yes, sir.
So until we meet on Zoom, enjoy your Easter break. Okay.
Yes, sir. Same to you. Thank you, sir.
So when are we submitting our assignment,
continue.
Yes, sir.
I'll communicate to you when to submit it.
All right, sir.
I'll communicate with on the LMS, isn't it?
Yes,
The
sir.
portal is still not open, so we want to find out whether
the portal is still not open.
it's not open for us to submit.
We are done with the assignment.
I'll speak to the lead Fafa so that Fafa will open it for you. Okay.
Yes, sir. Thank you.
And the slides, the slides you just shared with us is not on the LMS.
Yes, sir. It's not on
week
the
8.
The
Week
format.
7 and week 8.
Week 7 and 8 are not there.
Yes, sir.
Yes, sir.
Okay, so please send me a WhatsApp message so that I'll let Fafa do it in the course of the week. Okay.
Yes, sir.
Okay.
So Gabi,
enjoy the rest of the week.
Thank you, sir.
Okay, bye-bye.
Bye.
Dixon, Elsie, Selena, Elizabeth, Nat, Foster. We'll meet after this one. We'll meet and discuss some things.
Sure.
Time is almost up. It's just 3 minutes, 7 minutes.
No, I'm not saying after this one. I said this particular topic.
Today. Okay.
No. This particular topic. So that's okay.
All right.
Yes, boss. Okay.